For the entire week, the S&P 500 was giving a sideways movement and was trading in between 6,800 and the zone of 687x/82. So this was the consolidation. And the early sign of consolidation was seen on Monday when the S&P 500 lost the 6,800 and the low was 6799.94, and then it was clear that S&P 500 is now going to trade in between in a very limited range of 682x and the 6,800. Then came Tuesday, and then on Tuesday it was further confirmed that indeed the market is giving a sideways movement and is consolidating. This means that whatever is happening on Tuesday, then that is not going to change until Friday, because on Friday the inflation data will be released. That is why in the pre-market update before the open of the stock market on Tuesday, I mentioned that the S&P 500 is expected to trade in between 685x and 679x for the entire day. That is why we have seen that again and again S&P 500 tried to move up, but it failed. Again and again it failed. And you can see here that on Wednesday, it traded in between 685x and 680x. And then on Thursday, the S&P 500 came into the open equal to high conditions. This means that bullish side will be limited to its open price. Okay, whereas the bearish side will be to the 682x only. So everything was going well from Monday to Thursday without any problem, sideways movement and consolidation. But yesterday on Friday, there was very heavy volatility in the market. The S&P 500 breached the zone, moved up, entered into the 689x. But in the bearish side, it did not lose the 685x level. So now we are expecting a breakout in the market. Now, whether this breakout will be in the bull side or in the bearish side, this will be defined by the FOMC. Because if there comes a bullish breakout, then this will be towards the 7,000. Bearish breakout will bring it down to the levels. So all of this bullish bearish movement conditions, levels, etc., I'm going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of December 8th. Means from December 8th Monday to December 12th Friday. So now guys, before I proceed further, I would like to tell you that I have divided this S&P 500 technical analysis in two parts. First one is the technical part, second one is the probable movement. In the technical part, I will do the technical analysis on the weekly and the daily chart. In the probable movement part, okay, considering all of the factors, I will tell you how exactly we are expecting the market to move, whether it will move up first or if it will remain sideways. All of that in this, the probable movement part. So now I am going to begin with the technical part. So guys, before I proceed further, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, this is the technical part. First, I will cover the weekly chart. Okay, weekly chart means the long-term picture. Okay, what is expected to happen in the market in a month or in 3 months of time. Okay, then I will cover the daily chart. Daily chart is a short-term picture for a week or 2 weeks. And then combining these two charts, we will get a very clear picture of the movement. Okay, technical movement in the market. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, this is the weekly candle. So let's first discuss the candle. This is a normal bullish candle. The only good thing of the candle is that it closed above the closing of the previous candle. Okay, that's it. That's the only thing. Okay. However, it failed to close above the high of this candle because this was the open equal to high condition. And until and unless this condition is breached, okay, there will not be any significant or sustainable bullish movement in the market. Okay, it will remain under pressure. It will trade under pressure. So technically this candle is indicating an initial or intraday bullish movement on Monday. That's it. No gap up, nothing. Okay, just an initial or intraday bullish movement on Monday. This is the Dow Jones. This is the last weekly candle of the Dow Jones. Okay, the same condition, exactly the same condition. Okay, but the good thing is that just like the previous candle, it has breached and closed above the high of this candle that was open equal to high condition. but the candle is not strong. That is why we are expecting an initial or intraday bullish movement on Monday, okay, but no gap up open. Okay, so initial or intraday bullish movement on Monday through the candles. Now in terms of the technicals, okay, the market has sustained above the moving averages. So S&P 500 is bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud on the weekly chart. Okay, the problem is still there through the MACD. So MACD is still bearish. Okay, S&P 500 is bearish through the MACD on the weekly chart and is bullish through the stochastic RSI on the weekly chart. Okay, neither overbought nor saturated. Okay, however, if there comes a good green candle next week, okay, good green candle means where the closing is approx or above the current all-time high, which is 6920.34. In that case, we can expect it to hit the saturation. Okay, otherwise everything is good, everything is fine. The only problem is the MACD. So S&P 500 is 80% bullish. Sorry, not 80%. S&P 500 is 75% bullish on the weekly chart. Means the long-term trend is still bullish. Okay. Dow Jones, almost the same condition in the Dow Jones. It is bullish through the Ichimoku cloud, moving averages, and the Bollinger Bands on the weekly chart. And the Dow Jones, okay, yes, the good thing in the Dow Jones is that now there is a confirmed bullish crossover in the MACD of the Dow Jones. Okay, it has sustained the crossover of the last week. So Dow Jones is bullish through the MACD on the weekly chart and is also bullish through the stochastic RSI. This was something that was pending, okay, last week. It is neither overbought nor saturated. So Dow Jones on the weekly chart is 100% absolute bullish. 100% absolute bullish on the weekly chart. Okay, this means that Dow Jones is going to provide the necessary support or required support to the entire market to trade and to sustain bullish at least until Wednesday first half. Okay, why Wednesday? Because Wednesday is December 10th and FOMC event is there, and this time the SEPs will also be there. Okay, so technically market is in a condition to sustain until Wednesday first half. This sustain does not mean that market cannot come down. This sustained movement means market, even if the market comes down, even if the S&P 500, Dow Jones, Nasdaq, even if the indices comes down, then also the fall will be limited. Fall will be limited, okay, and recoverable until Wednesday first half. Okay, 2 p.m. you can say, Wednesday 2 p.m. right? So in this manner, this will help the market to hold and sustain bullish until Wednesday 2 p.m. Okay, even if there comes any fall, then also that will be recoverable. But now there is a problem. That problem is actually because of the daily chart. Okay, the saturation is there on the daily chart. So guys, this is the daily chart. Okay, now the problem. But before that, guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now on the daily chart, if you notice the candle, okay, candle is not good, candle is weak. Okay, it is simply in this the trend, the closing is above the previous candle. Okay, it is indicating an initial or intraday bullish movement. Okay, but no gap up open or nothing. Okay, just an initial or intraday bullish movement barely. Okay, this candle of the Dow Jones also the same initial or intraday bullish movement, but no gap up open. Okay, so on the weekly chart, on the daily chart, the candles are not strong and are indicating only an initial or intraday bullish movement. That's it and nothing else. Now in terms of the technicals, S&P 500 is bullish through the Bollinger Bands, bullish through the moving averages, and bullish through the Ichimoku cloud on the daily chart. Okay, this is the daily chart, and the S&P 500 is bullish through the MACD and bullish through the stochastic RSI on the daily chart. Okay, it has started to saturate and is also started and has also entered into the overbought condition. Okay, this means that any more bullish movement in the S&P 500 will force the S&P 500 to trigger the heavy saturation levels, and that will then trigger the fall. Okay, so although S&P 500 is 100% bullish on the daily chart, but at the same time it has hit the saturation and the overbought levels. Okay, Now it can sustain at these levels only and only because of the FOMC event. Otherwise this was not possible, because any more bullish movement will make it heavier and will force or will compel it to come down. That's it, simple. Dow Jones is also the same. Dow Jones is bullish through the Bollinger Bands and the Ichimoku cloud and the moving averages on the daily chart. And the Dow Jones is also bullish through the MACD and the stochastic RSI on the daily chart, and is also, it is saturated and a little overbought. Okay, the same condition in the Dow Jones. This means that now the market, the entire market, okay, the S&P 500, Dow Jones, Nasdaq are 100% technically bullish on the daily chart, okay, but have also hit the overbought conditions, overbought levels, okay. And this is now creating a problem to the market in a manner that because the FOMC is there, the market can sustain, okay, can hold at these levels, but still we can expect at least one red candle, okay, before Wednesday, means either on Monday or on Tuesday. If there comes a little, I'm not saying very heavy red candle, just a little or limited red candle will also work. If there comes a little or limited red candle, okay, then it will help the market to sustain until Wednesday bullish. If it goes bullish, if there comes a green candle on Monday in all of the indices, then this will create a problem to the entire market, to all of the indices, in a manner that there is no guarantee that if the market will be able to sustain on Tuesday. In answer to Tuesday, we can expect this kind of candle, this kind of red candle, means a good red candle, okay. If it doesn't give any good red candle on Tuesday, then the market is waiting for Wednesday. And if Wednesday, if all goes in favor of the market, then we will see a red candle, a limited red candle. If it goes against the market, then we will see a very heavy red candle, means there will be a red candle, okay. Depends that if it is favorable or not, okay. So this will happen in the entire market, in the S&P 500, Dow Jones and the Nasdaq. Now you might be wondering that the rate cut is already there, then why we are still expecting a red candle? So technically, okay, I have shown you this the reason, okay. And other than that, the bullish rally that you are seeing here, this bullish rally is because of the rate cut, the expected rate cut. Market has already priced in the rate cut, this bullish rally, the rate cut, okay. This means that now if the Fed gives the rate cut, then there is nothing left in this, the bullish rally, okay. So the bullish rally, whether it will enter and sustain in the 6,900 or not, okay, so that I will discuss in the next part, that is the probable movement. But guys, before that, let me tell you that how you can join my Patreon community. So for that, first you need to understand that it's not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give these premium opportunities 50 to 80 monthly. And that's not all, because I also gave the midweek update. This midweek update is a video technical analysis generally given every Wednesday, and I discussed movement that is expected to happen, okay, for the rest of the week. So in order to get all of these, the daily updates, the midweek update video and the premium opportunities, I have given the link in the description of the video and also in the comment section. And when you use that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will see this tab or button which says membership options. And when you click on this button which says membership options, then you will see these three levels, level 1, level 2 and level 3. Level 1 and level 2 are same. The only difference is the geographical location. This level 3 is the S&P 500 updates and opportunities. So when you subscribe to level 3, then you will be getting whatever you are going to get here, and the premium opportunities 50 to 80. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday of the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire market, and the premium opportunities in these, the stocks, premium stocks and the ETFs and everything. So guys, whenever you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. You can use that link to join my Patreon community. Now guys, let's discuss the second part. Second part of this technical analysis is the probable movement. Okay, so here I will give you the probable movement. What is expected to happen in the market in the next week? The week of December 8th means from December 8th, which is Monday, to December 12th, that will be Friday. Okay, so in terms of the probable movement, okay, first the most important event of the next week, that is Wednesday. Okay, Wednesday the FOMC event is there. Before Wednesday, on Tuesday, the JOLTS job opening data will be there. However, this data will be ignored. This data will be ignored if it comes negative to the market. Okay, what I'm saying is that if the data is seen as negative, okay, and it has to put the negative impact on the market, then the market will simply disregard this data. Why? Because it will then wait for the FOMC event, because it is already filled with the speculation that Feds are going to give the big relief. If this data on Tuesday comes favorable to the market, then S&P 500 can even breach its all-time high level if it is sustaining at or above the zone. Okay, if not, then not. Okay, so this data will work in this manner. But then on Wednesday, okay, through this FOMC, it will be very much clear, okay, whether the market is now going bullish or bearish. Okay, the breakout, okay, we will see. Breakout means if the market goes bullish in this direction, then 7,000 or a little above 7,000. If the market comes down in this direction, okay, the S&P 500, then back to these the levels, okay, 6,500, okay, back to these levels. So now in terms of the movement, okay, what we know is that as of now S&P 500 is still trading sideways and is still very much confined within the zone. Okay, what is the zone? 6,800 and the 687x/82. And this is exactly the same zone that I've repeatedly mentioned in my daily updates every day. So exactly the same we are expecting here to happen. Okay, just like up down or so. Now Monday, okay, see what will help the market, what will help the S&P 500 to come out of this the condition. Okay, a closing above what? A closing above 687x/82, a closing. And yesterday in the final update I mentioned that the same, if the closing, okay, closing was very important. If the closing is seen above 6882.32, okay, then it is a good bullish condition indicating an initial or intraday bullish movement on Monday, and also puts the SP 500 in a condition wherein the SP 500 can easily move into 6,900 range towards the current all-time high level. Okay, so this was only when or only if the S&P 500 closes above this number, this mark. However, the S&P 500 failed to close above the 687x/82, means the 6,882.82. It failed to close above that mark. It closed at 6,870. Okay, so now this means that on Monday again we are going to see a struggle in the bull side. Okay, there will be a struggle, because now the good thing is that in the bearish side it has started to sustain at the 685x level. Okay, it has started to sustain. So earlier it was the 682x level that was holding the market, but because on Wednesday, then on Thursday, continuously on Wednesday and Thursday, we have seen continuously hourly closings above 682x. That is why on Thursday itself, okay, and then yesterday on Friday, I mentioned to my Patreon community members that, see, because it has given back-to-back hourly closings above 682x, this means that now the 685x will be the new support level to the S&P 500, and yesterday it proved itself. Okay, so this means that as of now, okay, the zone will remain same. Okay, in this zone is like 80 points, 82 points zone. Okay, actually it is not 82 point zone, because it starts a little into the 679x, my level. Okay, 6,800 is the psychological mark, but my level is the 689x. So you can say that 80 to 90 points zone. In this, the 90 points zone, okay, 685x, my level. Okay, for now it will act as the tiebreaker, okay, in between the 687x82 and the 68 and in the 679x. And if the situation deteriorates and the S&P 500 closes below the 685x and the hourly closings are seen below 685x, then what will happen? then the movement will be in between 685x and 679x, and the 682x will be the tiebreaker. Okay, so this is very simple, very easy movement. Okay, so based on these two conditions, so there is a 90 approx 85 90 point zone. This 85 to 90 point zone, okay, is further divided into these are two sections, two parts. One is the 5x level, one is the 2x level. Okay, as long as the closings, hourly closings and all closings are above 5x, it will remain in between these two. Okay, if closing is seen below 5x, then it will remain between 5x and the 679x, and the 2x will be the tiebreaker. Okay, this condition will be there at least until Wednesday first half. Okay, Wednesday first half, because after 12 p.m. Eastern time on Wednesday, or 12:30 p.m. Eastern time, when I will give the midday update on Wednesday, we will see that the volatility will increase. Okay, this volatility will start to increase from Monday itself. Okay, but I am talking about a technical movement. Technical movement is these are the only 4 levels or zones. Okay, movement will be entirely limited to in between these the 4 levels or the zones. This is the technical movement. But because the volatility will increase from Monday itself, okay, because of the FOMC event on Wednesday. Okay, so if now what, so there is one more thing. Okay, what we know is that any more bullish movement in the S&P 500 will trigger more saturation and more overbought condition. It will trigger more saturation and more overbought condition, any more bullish movement in the S&P 500. Okay, it is clear. This means that if on Monday the S&P 500 gives a bullish closing, a green candle, this means that it is already heavy. S&P 500 is now heavy. Okay, so there will be very good chances that it can give up on Tuesday, means it can trade red. But in that case, on Tuesday there will be limited red candle. Okay, however, it sustains green on Monday, it sustains green on Tuesday. There are back-to-back 2 green candles on Monday and Tuesday. Now the S&P 500 is heavily susceptible for a fall, heavily susceptible in a manner that FOMC. Okay, this is the case when on Monday and Tuesday there are 2 green candles back to back. Okay, FOMC event. Okay, if everything goes in favor to the market, everything is favorable to the market, then we will see some like this kind of red candle on Wednesday. Okay, first we will see a push in the bull direction up. Okay, and then down, and then closes as red. Okay, intraday 1% movement from top to bottom, you can say. Okay, 1 or 1.5% movement. Okay, this is when the case is favorable. If the case is not favorable, okay, then we will see very heavy movement like this or like this, very heavy fall in the market. If it is not favorable, okay, or favorable, so on Wednesday, okay, I will give you the live updates. Okay, the live interpretation and the live levels numbers. Okay, I will open that the comment section, so you can modify your trades accordingly. Okay, so now this is the case. Okay, a very bad scenario is that if it remains bullish on Monday, Tuesday and Wednesday, well, generally technically that is not possible. Technically it is not possible that it can sustain green for continuously for 3 days including Wednesday. Okay, but because the FOMC event is there, market, the volatility will be very high, so it can override the technicals. Okay, but still I'm not sure if the market will be able to sustain green on Wednesday. However, in a case if the S&P 500 sustains green, means Monday, Tuesday, Wednesday, green, okay, then we will expect profit booking. This profit booking will then it may not happen on Thursday. Okay, it can happen on Friday. Okay, because Friday will be the weekly expiry, there will be very heavy volume, so then this heavy profit booking, okay, similar to this kind of profit booking, okay, a very heavy fall we will see in the market, wherein all of the gains, okay, here will be erased, okay, in a single day. So that kind of movement will be seen. Okay, means we will see. Now there is a case, okay, that if the S&P 500 before the FOMC moves up, okay, enters into the 6900 and breaches the all-time high 6920. 6920.34 is the all-time high of the S&P 500. Okay, so what will happen in that case? But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get the daily precise updates of the S&P 500, Dow Jones and Nasdaq, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now, yes, if the S&P 500 breaches the all-time high level, okay, before the FOMC event, like either on Monday, okay, or on Tuesday, if it breaches this, the all-time high, and how it can breach? For that to happen, the S&P 500 must first give back-to-back hourly closings above the 687x. Then only we can expect the bullish movement in the market, and this bullish movement will be towards the all-time high level. Otherwise, this will not happen. Otherwise, this is not possible at all. Yesterday also, if you are my Patreon community member, okay, so yesterday also I mentioned that only if there comes back-to-back hourly closings, at least 2 back-to-back hourly closings, then only it can move to 6,900 or a little beyond 6,900. But the all-time high was not in the picture. Okay, yesterday also this was not in the picture at all. Okay, so however, if on Monday situation improves, it gives back-to-back hourly closing, then Tuesday, okay, it can try to hit and breach the all-time high level. Now the most important part here is the breach. If the S&P 500 breaches the all-time high level, I'm not saying closing above the all-time high level, okay, that's a breakout condition. I'm saying if the S&P 500 breaches the all-time high level, okay, before 2 p.m. Wednesday, if it breaches the all-time high level, then this will bring the bullish sentiments in the market in a manner that even if there comes very heavy fall, then after that fall, market will remain recoverable. Okay, that fall will be because now that they are dumping, the big ones, they are dumping, they push the market up, now they are booking profits. Okay, once the profit is booked, then they will buy again, okay, here at some point, and then they will push the market up back to the 7,000, in the 7,000 range. Okay, so a breach is very important, very, very important. Okay, and this must happen before 2 p.m. On Wednesday. Okay, because if it happens after the decision is released, the decision is known, okay, or during the press conference, then it will not be sustainable. If it happens before 2 p.m. Eastern time, then yes, then definitely, okay, it will work in this manner. However, okay, what we know is that as of now, the daily charts are 100% absolute bullish. Okay, the weekly chart, the Dow Jones is 100% bullish on the weekly chart, but the S&P 500 is 75% bullish on the weekly chart. MACD is still trading bearish. All of these numbers, 100%, 75% indicates the long-term trend is still bullish. There is no change in the long-term trend. Earlier, this change was in the short-term trend. Okay, I've repeatedly mentioned this is the short-term trend change, not the long-term trend. Long-term trend was, then also it was bullish. This was a short-term trend change. Okay, now the short-term trend we have seen, okay, again it has started to move up and is sustaining in this manner. Okay, so this means that even if there comes a fall, what does the trend mean? Trend means that even if there comes a fall, whether it is limited or whether it is heavy, okay, we will see a recovery. We will see a recovery. Okay, this recovery will happen, okay, as long as the closings are above the Ichimoku cloud. Closings are, or in short, the closings are above the 6,800 psychological mark. We will see the recovery in the market. Because if there comes closings inside the Ichimoku cloud, then the picture will change from bullish to bearish, because this will be happening for the second time, and second time it will have to lose the Ichimoku cloud. It will have to come down. Okay, so now in terms of the numbers, what we know is that, okay, before or after the FOMC, if the S&P 500, first of all, there must come a breach, then there must come a closing above the all-time high level. Okay, this can happen only when the S&P 500 sustains and closes above the 687x82. Okay, first this must happen, then only this can happen. When the S&P 500 moves up, it trades bullish. Okay, it breaches the current all-time high level, then it is free to move towards the 7,000 psychological mark. But I'm not saying and I'm not confirming if the S&P 500 is in a condition to hit the 7,000 in the next week from December 8th to December 12th. Okay, because for the 7,000 to happen, a lot of conditions must be fulfilled. Okay, because 7,000 is a psychological mark. Okay, and so means even if the S&P 500 in the best case scenario it moves up, then also we can see like 699x, and then there is a heavy failure. Okay, means it will hesitate strongly to hit the 7,000 psychological mark. Before it hits the 7,000, we can see 1 or 2 times bearish movement. Okay, just a short-term fall. Okay, so bullish movement after breaching and closing above the current all-time high level, it is free to move towards 7,000, but 7,000 cannot be confirmed. Okay, bearish side will be triggered. Okay, and the earliest indication of the bearish side will be the loss of 682x on the closing basis, because if the closings are seen below the 682x, this means that most likely S&P 500 is going to lose the 6,800, and most likely it is going to lose the level 679x. When that happens, this means S&P 500 is heavily susceptible to enter into the Ichimoku cloud. However, everything will remain good and well as long as that closings, it enters but retraces and closes above the Ichimoku cloud. Fine, perfectly fine, not a problem. Okay, so but if it closes inside the Ichimoku cloud, then the 6,700, in that case the 672x. Okay, before that there is a zone. Okay, there's a zone in the 676x. Okay, that will handle the fall, but eventually it will be coming down to the 672x. In the worst case scenario, if the FOMC goes like negative, if the FOMC meeting is, or the FOMC event is not favorable to the market, then we will see a movement, the fall, a heavy fall that can be seen up to the 6,600 range, and the fall will be then handled in the 6,600. What will handle the fall in the 6,600? The standard support zone 664x/6x. Again and again it has proven itself. Okay, any kind of heavy fall intraday, non-intraday, it will be handled at the zone. So this means that bullish side, okay, even in the best case scenario, bullish side is limited. Okay, because of saturation, overbought. Okay, and then the 7,000 psychological mark. Okay, even in the best case scenario, bullish side is limited, but the bearish side is open. Okay, if all goes well in favor to the market, then the bearish side will be limited to the 6,800 itself. Okay, if it goes against, then to the 6,700, or the worst case to the 6,600 range. But whatever will happen, I will keep you posted through these daily precise updates which I give to my Patreon community members. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.